and welcome to the next gen OPT, that is the next generation of profitable traders. And I am releasing these videos just for the beginners in this masterclass. So, what is Forex? What is Forex? A lot of people have been asking me this question: what is Forex? How do I get into Forex? Now, today we're going to step right into it. So the foreign exchange market, which is usually known as Forex or FX, is the largest financial market in the world. And I'm going to tell you why. The FX market is a global decentralized market where the world's currencies change hands. Due to the wide range of market participants, including central banks, financial institutions, corporations, hedge funds, and individual traders, exchange rates change by the second, so the market is constantly in flux. So compared to the measly $20 billion per day volume in the New York Stock Exchange market, the foreign exchange market looks absolutely ginormous with a 7.5 trillion a day trade volume. So you can imagine $7.5 trillion day trading volume is moving in the foreign exchange market. There is no other financial market in the world that is like that. Now, what is foreign exchange in itself? So this has to do with the exchange of currencies between two currencies, right? Digitally. So it is a global exchange of currencies. The central banks, like you can see, are involved. Hedge funds are involved. Corporations like brokerages, you have mortgage banks, your local banks, they are actually involved in this foreign exchange market. Now tell me why you don't want to get into it. All right then, so moving on, we have the market participants, that is the central banks. So central banks are like the puppet masters of the forex market. These big guys are responsible for managing a country's monetary policy and regulating the supply of money and interest rates. So key central banks include the European Central Bank, the Bank of England, and the Federal Reserve. By doing this, they can affect currency valuation. There are also instances when central banks intervene either directly or verbally in the forex market when they want to realign exchange rates. So the central bank, as you can see, is a big player in this market as the government of countries use them to regulate monetary policy, either to increase fluctuation or reduce fluctuation, just to make sure is that the money is stable, either it is very strong or it is really weak. So I can remember when Nigeria had to pump in $500 million just to make sure that Naira gained a little bit of strength, right? From 1.8 against the dollar, it became 1.2 against the dollar. It might not look like much because of the volume that is moving in the market. Imagine $500 million compared to a $7.5 trillion volume per day moving in the market. So we also have the super banks. When it comes to forex trading, commercial banks and financial institutions are the movers and shakers. Since the forex spot market is decentralized, it is the largest banks in the world that determine the exchange rate. Do you get it? They facilitate currency trading for their clients, including corporations, governments, and other financial institutions, and engage in proprietary trading. They are responsible for most of the daily trading volume, and they can make their money by acting as market makers. This means they are constantly buying and selling currencies, pocketing the difference between the bid and the ask price. As you can see, your super banks, right? They are constantly in the forex market. So I used to tell people, you think your money is you just kept your money in the bank and it is just there cooling off. What you call gambling is what your bank is constantly involved in. You see them looking at the differences in price and exchanging simultaneously. It might not look so easy, but trust me, they also have traders in the bank, people that trade professionally for them. So we have large commercial companies. So corporate forex transactions, especially those involving large amounts, can lead to significant shifts in currency exchange rates. Multinational corporations participate in the forex market to manage their currency exposure resulting from international trade and investment. Examples include Apple, Toyota, ExxonMobil. You see, they are also involved in the foreign exchange market. For instance, Apple must first exchange its US dollars for the Japanese yen when purchasing electronic parts from Japan for its product. So it must exchange US dollars to Japanese yen. And in that instance, because you want to do bulk purchase, you need to look for a right window when the Japanese yen is a little bit lower, so that you can get more when you exchange your US dollars. Do you get it? So they are constantly involved in the foreign exchange market. That is why I don't get why some people say you're playing with your life. This is gambling. Now you don't have to listen to nobody. So the speculators actively seek to profit from currency price movement. They differ from other market participants in that they do not seek to hedge risk or conduct international trade, but rather aim to exploit market volatility for profit. So we are the speculators. Hedge funds also are speculators. Speculators are focused on price fluctuations. For this lesson, let's narrow down speculators into two buckets: hedge funds and retail traders. So what are hedge funds? Hedge funds are billionaires, those individuals that have so much money to manipulate the market. Like Elon Musk is an hedge fund, Warren Buffett is an hedge fund, Bill Gates is an hedge fund, Mark Zuckerberg is an hedge fund. These people have so much money that they can literally cause the markets to move in a very spectacular direction. Now, retail traders, I am a retail trader because I'm not trading with up to up to 20-50 million dollars now. So you're a retail trader, and all of us coupled together also make a significant amount of trading volume in the market. And what do? We aim to exploit market volatility for profit, just looking at the strength and the weakness, looking when to enter, to sell off, buy in, and get the market moving on. So we also have home market participants. We have the brokers. So brokerages, these are people that offer you, I call them the forex banks, right? Brokers, the forex banks. Now, for you to be able to trade in the forex market, you need to have a broker. And I'll be sending the link shortly to the group. If you don't have a broker, make sure that you register with the link I send to get a broker and get it ready for the masterclass. So brokers are like the banks of the forex market. For you to be able to trade in the forex market, normally for you to be able to open a position of $1, right, you need $1,000. So a $1 per 10 pip move, you need $1,000, and not really everybody can fund up to $1,000. And imagine funding $1,000 only to be making a measly $2, $3, $4. No, this is where the brokers come in. They have a lot of money, right? Now, what do? They take your money, add it to their own money. Because of they have a lot of money, they have the money to buy license from MetaQuote. MetaQuote sells license to traders. If you want to trade directly with them, they have the white license, they have the black license. Now they have the money, they have the licensing, and they will take your money, your $1,000, $2,000, $100, $200, add it to their own money, and then give you what we call buying power, which is leverage. And I'll be explaining that in the coming sessions. So what is spread and lot size?